afternoon, everybody. Welcome to the TraderMerlin Show for your Monday, the April 11th edition, and a very busy week it is going to be. Glad to have everybody with us. Good to see you, Joe. We got Doug Gallo. What else we got? Tom. Good to see you, Tom. Katut. We got Boss Poopa. Lori V says, I'll see you next month in Las Vegas. Yes, you shall. Eric and Les Gold. On that note, I guess I could do a gratuitous plug. Why not? Every now and again, I should be entitled to do gratuitous plugs, which I don't do very often for myself. I plug every one of my guests and everything that they do, but I don't generally plug my stuff. Of course, you guys know I do the cryptocurrency program for Online Trading Academy. You can find a free 6-video lesson in the comments down below or in the description for this video. Also, as Lori mentioned, I will be in Las Vegas. I'm going to be presenting May 11th. So the festival or the money show goes for 3 days. It's May 9th, 10th, and 11th up in Las Vegas. Usually it's at the conference center that connects the Bally's and Paris resorts. Always a fun time. It's interesting to see so many diverse people talking and presenting. Remember, most of them are trying to sell something. So always leave your wallet at home is usually my recommendation. But there will be a presentation by myself on the 11th talking about really implementing digital assets in with your current portfolio. And I think that at some point this will be a topic that almost every financial planner will have. There will be some integration of digital assets in that portfolio mix of traditional bonds and equities, right? Gone are the days where you just cookie cutter it and say, oh, well, you're 30 years old, you should be 70% in stocks, right? That type of stuff is just au passé. So, see me at the meet and greet. Maybe we'll go have drinks afterwards. I'm not going to be doing anything. Actually, in the morning, I won't be able to go drink before my presentation. Probably not a good idea to go up on stage all drunk, but we'll see at the meet and greet. Okay, so let's get in touch with what the topic du jour was. It really is, I was looking back through and I was going to call it, say, like the market bloodbath, but I realized, I got so many questions I need to get to, and I encourage everybody to post their comments and questions down below the YouTube video, yet I didn't really have them all there. I haven't been answering all those questions, so I figured I would catch up on some of those today, which brings me to our Q&A. So I will do kind of an open Q&A. I have a couple different broad topics I want to get to. I'm going to start by looking at our overall markets, which were pretty ugly out there today. I did sell some more puts for XLK today, which is down over 2%. Love that. Got some pretty nice premium for about a month out, which I think I'll be safe on, but I will let you know what our perspectives are right about now. So let's start off at the bottom. It is not looking good for crypto. I'm actually, it's a question of, are we about to see a prolonged bear market? I know a lot of people look at the current chart here on Bitcoin and think we're in a bear market, or we have been and now we're about to rebound out. And it does feel like we're basing. However, if we get below 35,000, it would not surprise me to see a longer kind of consistent move down, because there has been this very tight correlation between equity indexes and crypto. Now, you heard me talk about this over the years that I've been doing this, that there seemed to be in the past when the equity markets were down, you would see cryptocurrencies rise. So it was almost like an inverse relationship. And that relationship has disappeared, in my opinion. Right now, I think you're pretty much like a 90% correlation between things like Bitcoin and Ethereum and the overall indexes. So, if these markets start to roll over, and we'll look at those price charts here in just a second, then this chart could go down even more. And that has me a little bit concerned. Obviously, I have some pretty significant holdings in crypto. But I guess if you're thinking like I am, that this is for the long haul, then there might be some good opportunities. Now today, as you can see, just this hideous red candle form down about 6.66%. Anybody here is into demonic worshiping 666, the sign of the devil. There we go. An evil day, I will say, for Bitcoin. But if I scroll down here, look at some of these other cryptos. Let's sort here by biggest losers. I mean, you're talking some nice double-digit gains for some pretty popular cryptos and high single-digit, losses, and pretty much losses across the board. Even on my watch list, there's nothing that's green. This right here is just the premium for Bitcoin, which I should remove on GBTC. Other than that, everything is negative in that crypto space. So I'll move on the list and go up to your next biggest loser. So Bitcoin, again, down the 666. Crude oil giving back that big surge we saw back in March. It's given almost all of it back, and we talked about this last week. I still am sticking by this zone here between, call it 91 and 88, that $3 window right there. If we get down below that, I do think you'll see more downside movement in crude oil, regardless of what the political is, the geopolitical, war, whatever. opening up reserves, who cares? Price charts don't lie. And at this point, you're not seeing any reason for people to buy it, right? It's making lower highs and same lows. This is called a descending triangle, which is one of my personal favorite patterns. We talked about pattern books last week. You've got that real steep decline there. That just tells me you've got not a lot of interest in people buying crude oil at this point. So whatever the opinion is, it's not very bullish. So if we get down below this 88 mark, I think you'll see some significant move, and it could bring you all the way down to the 60s, although that seems far-fetched, does it not? Given all that's going on. I mean, I'm in California, so I would love to see that type of pullback. Get me away from $7 oil. It's crazy. $7 gas, excuse me. Yeah, GD says, went to 666. Les, remember the S&P also hit the low of 666 back in the day. Yep, that was the low of 2009. Was 666 on the S&P, which is a fun one to look back at. Let's just look historically. Why not? We've got the time. We'll go back on a monthly and way back here into our 2009 lows. And you can see low. Oh, this is going to be adjusted, but 666 is what the low was there. There you go. Yes, I do remember that. I remember laughing the day that it got down to 666, and I'm kicking myself for not loading the boat and buying everything I could, but, hindsight is 20/20, they say. All right, so we've only made it to crude oil. Not looking so great. We'll see what happens this week. Of course, we have some inventory numbers coming out Wednesday and Thursday on natural gas and crude oil, so we have those pan out. But moving up the list, NASDAQ, again, taking it on the chin harder today, 2.2% slide in the NQs, putting us just about 14,000. You're at 14,003. Again, I do think that your next stop on this chart here is that 13,000 mark, and very similar to what we mentioned with Bitcoin. Once you get below some key thresholds, it will start to trigger selling. And for me, that threshold, I'll put a horizontal line. I don't even know why these lines are here, but let's just move this red line down. If you get down below 13,000, close below 13,000, I think that's going to start triggering a lot of selling and push this thing down even further. Kind of kicking myself that I got stopped out of my S&P puts, which is right here. S&P not looking as bad as the NASDAQ, but still down 1.64% on the day. 4,409 is where the S&P is at as we speak. I think you'll end up, if we do continue to get selling pressure, you'll challenge these lows. And again, once we get below those lows, then you'll get a whole new wave of selling. Everyone right now is eyeballing that 3140 mark as kind of the bounce point where we should stop and pause and be okay. Who knows? Only time will tell. All right, top three podium time. We've got the Dow Jones Industrial Average finished third out of my top 7 to look at. Chart-wise, it looks strong. Even though you're down 1.09% on the Dow today, notice the pattern. It's holding the lows from March 23rd and 24th and just sticking there. Where you look at the S&P, it's below them. NASDAQ, well below them. Russell, well below those as well. So Dow looking the best from the big 4 indexes, but remember, I personally don't think it's the greatest representation of the broad market. All right, next, Russell 2000. Here's your RTY futures coming right back down towards those lows. Similar story. If it gets below here and closes, let's say below 1925, I'll probably start building up short positions again. I have added a couple tiny positions, but nothing to really speak of. Back a little bit on the Russell for July, but I might need to close that one out and go a little bit further out time-wise. So if we get below 1925, that'll be adding more to my position. But today, down 0.65%, not a huge slide compared to the other indexes, but all in all, an ugly day. And we did have one shining star out there, and that was gold, which of course you would expect when the markets are going to hell in a handbasket. Flight to security. Let's look for something safe. Well, apparently gold is what people felt safe with today, up 0.61% for gold. And of course, I am still in my silver, which is up 1.45% today, liking that one as well. And that, my friends, is your top 7 markets. Now, before I get to those questions, let's continue on with kind of reviewing different markets, because we talked about the dollar continuing its strength. It had a shooting star on Friday, which I thought was an interesting one, and I was kind of thinking we might see a pullback here in the dollar. It actually would have triggered shorts if I was shorting playing the dollar index, but ended up being bullish on the day and finishing higher. We talked about that 100 mark. Well, we hit it on Friday's session, and now we're at 99.98. After that, you've got some supply levels that go a bit further back for that dollar. And again, remember, strong dollar means weak market. So something to pay attention to there. Now, we also want to talk about bonds, because bonds have been the topic du jour. Let's go here and show you This is the yield curve, so that's not going to be impactful. Everything's kind of bounced out of that inversion state. So this is the 30 and the 2-year. It's bounced out of that inversion. Here's the 10-year and the 10-year and the 2. It's bounced out as well. But notice the moves up we've had over the past couple of days have just been, this is weekly. Let's go past couple of days. Have been pretty damn strong. It is just not looking back, and I think this is because of the statements made by Jerome Powell in the meeting minutes as well as the other ranking members that, look, we're going to be unwinding $95 billion a month worth of mortgage-backed securities and treasuries, and that's going to start to push these yields up because they're flooding the market with inventory. That means a whole lot of supply. They're going to have to reward people for buying this gigantic deluge of bonds, and therefore yields are starting to spike. So gone are the days, my friends, of a 4% or 3% or even a 2% 30-year fixed-rate mortgage. And lastly, John Rowland's probably just loving this right now. Remember, we had him on last week, and we were talking about getting above those most recent highs that it was established back here on the 6th of October of 2021. That high price for natural gas being $6.46. Saying, look, we get above that, smooth sailing, and he was targeting $8, and it has been ripping ever since. Had him on the show. It just keeps on going. So great to have John Rowland on the program talking about natural gas because it is absolutely on fire. No natural gas puns there, but $8 is that price target there, and I think that was pretty much it. We saw wheat kind of take a bit of a surge today as well, but not many people in this room are trading wheat, so it's all academic at this point. Now, let's talk a little bit about current market topics. So, Michael, thank you for sending this one in on the YouTube channel. I'll start off with your question first. He says, is it possible there could be a battle for Twitter since Elon Musk has 10%, well, call it 9.2. What are the chances that an anti-Musk buyer would try to get more control of Twitter to keep it the way it is and buy 10% or more than 10%? Then Musk would need to buy more, or maybe he knows that to keep Twitter a free speech platform, he would need 51% in the next week's months. Well, I don't think he needs 51%. I think that what he needs is to sway the people, the investors, right? So he has got so much clout that people will pretty much do what Elon Musk says. So I don't think he needs 51% at all. He just has to have a controlling interest and say, hey, this is where I think it should go. What do you guys think? And people go, I'm with Elon Musk. The other thing that's interesting here, if you look at the holdings, like the top holders for Twitter, it's all major financial firms. It's BlackRock, it's JP Morgan. I mean, it's major financial firms. So if I look at, do people care about, and I apologize if I sound just like, I don't know what the right term, you guys can tell me what the right term for this is, if I don't mean to sound this way, but I personally don't think that JP Morgan or BlackRock, whoever's holding, I think JP Morgan's got like 8% of the shares. I don't think they give a crap about if this is a free speech platform, if this is a communist manifesto platform, if this is like the most ridiculous platform on earth. All they care about is that the price of this security goes up because they hold 8 or 9% of it. And that's my just take on it. I think you look at just the pure greed factor out there. They might label themselves as conservative or label themselves as liberal, but bottom line is my investment going to make me money? Then that's what I want it to do. And when you got Elon Musk in your corner pushing, my guess is it'll probably make more money with Elon Musk driving. Just my 2 cents. I'm sure some of you guys differ there, but let me know what you think. So to Michael's point, is it possible for somebody else to come out there and say, I don't want to have Musk influence things, I'm going to buy more than 10%? Certainly it's possible, but I don't think that that's a probable. I don't think you're going to see some activist out there going, no, we're going to go whatever Musk wants, we want the opposite. I don't think that's going to happen. Now, could it? Sure. And of course, that would be great for the price of Twitter. Probably see this thing soar a lot more. I personally think you're going to see it drift back down here, potentially close this gap before starting a slow trend up. Now, you have, the other news today was that Elon Musk was going to take a seat on the board. And in doing so, he would give up his right to buy or take over the company. However, he backed out of that today. He said, I'm not going to be on the board of directors after careful consideration, which leaves the door open here for more potential movement from Trump not Trump. He's got his own social media company, from Elon Musk going forward. So I don't know how this is all going to pan out. My gut tells me that, and I may just put my money where my mouth is and actually buy some options. I'm thinking of buying some calls that are deep out of the money, like let's say the $60 calls, and buy those for, let's say, November or December. Because if Elon Musk backed out from the board and says, I don't want that role, which would help him guide the company, then that kind of tells me he might have more of an interest in taking over the company, right? So if that happens, I think you'll see the market respond instinctively, because pretty much anything Musk touches spikes in value. If all of a sudden he says he's going to buy it and take it over and rebrand this company, I think it'll soar. So I might take just a couple options there, not a big position, a few $1,000s to make that play. But I have the feeling that you're going to see a lot of headline news with Twitter for the remainder of the year, based off what Elon Musk is doing and what he might ultimately do with Twitter. Many writes limit his options to buy more. Yep. There's a lot of things that could limit that. What makes Elon Musk so dangerous is his connections and his clout and his reputation. He could easily go to BlackRock. He could easily go to JP Morgan and the top holders and easily get 51% of the people to side with him. How could he do that? He might, give them a spiff if you basically give them a little extra perks. Like, hey, if you guys do this, I'll get you in on SpaceX at a cheap IPO price, right? You sweeten the pot to do what I want. That's power. That's absolute power. If you look at Warren Buffett, he uses this too. If you look what happened when Warren Buffett bailed out Bank of America back in 2009, they were struggling. It looked like they might potentially even go under. He said, I'll bail you out, but if I do this, I want this, and this. It's the quid pro quo approach to financial markets. So don't put it past him to get 51%. Even though he doesn't own 51%, he could sway the vote. I thought the same when he did not want to go on the board. He wants more stock. However, I think Zuckerberg could buy 10%. I don't think Zuckerberg is going to go that route. I mean, who knows? There was some fake headlines as well. If you guys saw, I checked it out and they actually been debunked. There were some headlines going around that Elon Musk was talking to Mark Zuckerberg about buying Facebook. That was not a true story. Of course, watch, it'll happen next week and I'll look stupid. Let's see, what else we got? I would imagine they own some in part of the... Yep. There's a lot of things that limit. Unfortunately, I'm not too clear on what he can and cannot do with regards to ownership, but I think that he can continue to buy as long as he discloses what he owns of that company. And of course, there's always shell companies and partnerships, etc. So, Michael, that's it. I think that it's definitely possible for someone to come in and compete with him, but I don't think that that's the one you want to compete with. And I don't think Zuckerberg would do something like that. If anything, start your own little Twitter-type platform or your TikTok-type platform, which Zuckerberg has been clear that that's what they're trying to do, is create more of a TikTok-type platform versus a Twitter-type platform. All right. Let's see. Michael says, is TLT in demand zone in your opinion? It's in the mastermind grid. Ooh, I didn't look at the mastermind grid today, but let's check out TLT. So here's TLT, cratering, right? And first off, before we say, hey, this isn't a demand zone or this is a good buy point, always remember what is driving this. Just because something looks like it's oversold in this situation, you would look at TLT, which is the price of the bonds. You're basically thinking, oh, man, this thing looks like a great deal here because it's down 21% since December. I mean, wow, what a discount for bonds. But remember, as yields continue to rise, and that seems to be a foregone conclusion at this point. I don't think there's anybody out there that's saying, hey, yields are going to absolutely get crushed. If yields keep rising, this is going to keep dropping. So I think it's more important to look at the yield chart for turning points than TLT. That said, if I zoom out here, you got to go back onto a weekly really to keep it kind of clean. Where are we at? Yes, I would definitely say that this would be in a demand zone and a potential buy point. However, you're catching a falling knife, and it's very aggressive because yields are rising. And we're going to get a rate increase next month, 50 basis points most likely. Some say 25, some say 75, but rates are going to start to surge. So yes, you could definitely take this trade, and it's one of those situations where if you do take a trade like this, where you're looking at buying, let's say TLT, you've got to have a really tight stop loss on it, because if those yields start to or continue to spike, and mind you, here's the 10-year, right? Here's the 30-year. They're all trending strongly to the upside, especially the 10. Now the 10 is right at supply level as well. So that kind of lines up with your area of demand. So from that perspective, bravo for whoever chose this in the mastermind grid. I know that they got a team. I know Larry's doing some, Todd's doing some, Jordan Matthews is doing some, Brock Pierce is doing some. So there's a bunch of different instructors making out the levels for the grid. Yes, I think that at this point, if you're looking at TLT as a potential buy point, I would say I'd give it a thumbs up. However, you just have to have a real tight stop loss on this one, because if it gets below, I mean, you're catching the falling knife. You are, standing the way of the avalanche, but you are increasing your chances of it bouncing, simply because a lot of people are going to feel it's oversold and coming into a demand zone. So make the play. Just make sure you use a freaking stop loss. Please don't get caught holding this thing as if it keeps drifting down. I mean, if we all of a sudden get a 75 basis point increase at the meeting next month, or let's say a 1 point increase, who knows, you're going to get smoked on this thing. So be really careful. Right now, you would not think that bond products are hot. I mean, you don't look at a bond product and go, man, they're so volatile. It's not Bitcoin. However, they are far more volatile than they have been historically because of what's going on with the Fed and inflation and all these rate increases. So be very careful out there, Mike. I'm glad you brought that one up. I didn't look at the mastermind grid today, but I think that was a good one. Hey, Tony, good to see you. And I love the new song, by the way. Guys, should check out Tony on social media. He puts out music all the time, and he's a damn good musician. Shred Life says, do you know anything about how the Baltic Dry Index how rates impact Baltic Dry Index? I don't know the direct impact, but I think we can step back and look at what does a rising cost of capital mean, right? So you said lots of shippers did really well, now getting crushed. Zim, for example. So my mind would say this: if I have to write a college paper on what's the impact of U.S. or rate increases on the Baltic Dry Shipping Index, it's a giant domino theory. It's like a Rube, what do they call it? Rube Goldberg thing, where one thing hits the other and everything kind of keeps moving and keeps moving and keep. I think what would happen if these rates continue to rise. Now, we are by no means at a level where it's like, oh, wow, historically, this is incredible. No, we're not there. So here's your 10-year. I mean, over the past couple of years, yeah, this is a ridiculous increase in the rates. However, you look at the big picture, blip. It's a little blip. No big deal, right? We get above this 3%. Now I think you really start to worry, and we're pretty damn close there, but really 3.26 was the high that we established last October. So what is the domino effect here? The rising rates, the higher they go, the more it's going to start to impact people's spending. If I don't spend more money, then then Target's not going to need to stock the stuff on their shelves as much. Walmart's not going to need to stock. I'm not going to buy as many e-bikes, right, from China, because I don't have access to cheap capital. When I have a loan that I can get at 3%, great, I can buy more. If I'm now at 6 or 7 or 8, it constricts what I can buy. Plus, you have the impact, doubling that, of inflation, where the prices are just getting higher and higher and higher. I'm going to buy less. So as a consumer, if I buy less because rates have been rising and inflation is really high, my lack of spending starts to hurt the economy. And if that continues, and I'm just one data point. Mind you, I'm probably the cheapest guy in the room. I'm going to be very frugal about what I spend anyway. But some of you, if you know people that are on a very specific amount of income, they know they can only buy X amount of Coca-Cola or bananas or, toilet paper from the store. That inflation number is going to get high enough where it's going to start to impact their consumption patterns. Now, why does this impact the Baltic Dry Index? Because that's goods and services being shipped back and forth. And if demand drops, and of course, almost everything comes from China, if demand drops, then all of a sudden you have less shipping. And I think that Baltic Index would start to take a dive. But that's going to be long term, right? That's a trickle-down effect, in my opinion. That's going to take a long time to get there. So there you go. There's my college paper in 3 minutes. Yeah, rates are not going down. They will at some point, but they're going to continue going up. I think right now it is a very bullish move in rates to the upside. Steve, Merlin, how do you manage risk when buying crypto coins and staking when there's no FDIC insurance? Also, as Goog has billions of dollars in cash on hand, why have they lost 10% in 2 weeks? Who knows? I think just general feel. As far as Google goes, let's just check out Google. You look at why they've sold off so much. I mean, you might make a big deal about the most recent drop, but in grand scheme of things, you look at that, I don't think that this move is even anything even significant. To me, there's a potential for a tremendous amount more sell-off here on things like Google and Amazon and Facebook. I mean, they got all so jacked up because of all the stimulus. Remember that a lot of the stimulus is going to be going away. Well, it's gone at this point. Now they're going to start unwinding and contracting the money supply. So that means it's even harder for people to spend more money. I mean, look at Google. You got Amazon. Amazon's just dead in the water. Let's Facebook. Okay, they've already got their, been crushed there. What was another one? I never looked at Microsoft. But everything's just kind of slowing down. These are just normal pullbacks. With regards to Google as to why it sold off so much, I don't know. I think it's just kind of overall the tech, people just taking money off the table and now looking for companies that are going to do well. I think what you get in an environment like this where people start to get nervous about rising rates and a potential recession. I mean, if you turn on any financial station right now, it's recession, it's rising rate environment, it's super high inflation that's out of control. That's fear. So what happens is you'll get a rotation into assets that perform well when markets sell off. I'll let you guys answer this question. Name me a sector that typically does well when the market's correct. Not only that they do well when the market's correct, but this specific sector usually pays dividends and you can earn money while the markets are selling off. Which sector would you say out of the broad spectrum? I think there's like 11 sectors out there in the S&P. Which sector would probably do the best during a market crash? Just curious what you guys think. It's classic sector rotation model, right? You tend to see financials do well at a bottom. You tend to see this specific market segment do very well at the top of a market right before it starts to roll over and sell off. So, energy does okay, but energy's already had a huge run up. So here is, let's show you that. I'm going to start with energy, which has been doing well, right? Its utilities is generally the number one. Utilities tend to do the best. And check out the chart of XLU. Do I have it here? The chart of XLU is ridiculous. I mean, not only has it been on a beautiful trend, but it's just really vaulted. And this is a weekly, by the way. Let's just go look at it on a daily so you can see how crazy it's been. This tells me that people are right now moving their money into utilities because they're looking for the future and saying, hey, you know what? Down the road, 6 months, 8 months, a year down the road, maybe longer, I need to have my capital deployed in something that is going to be safer than going into like technology stocks or financials. Who knows what the historical positions of those ones might be, but utilities tends to do very well when markets sell off. So you can see people already putting their money in, trying to not only get the benefit of utilities, but also maybe the earnings that they provide. Let me see real quick. I want to see. It's XLU ETF, but I want to see what their dividend is, what their dividend is paying. 1 second. The beauty of doing these things live. So they're yielding 2.88%. That's their yield. So not huge, but you're getting some amount of yield by looking at something like utilities. So great question. I'm glad you brought that one up. So let's see. That was Google. So I think you have part of the main thing is you have a rotation from high risk, high growth companies to value plays, right? Now you're going to see money, I think, going into the very stable ones that aren't like, hey, let's look at the huge growth prospects for things like Tesla. Let's go back to things that are actually working and doing. Your Kraft Heinz, your Colgate Palmolive, your Exxon Mobil's, right? These types of companies probably going to do rather well, as well as consumer staples, where, there's things we're just not going to cut back on. I think I made the joke before, but, if the markets go to hell in a handbasket, it's not like I'm going to be going into my bathroom going, okay, I used to use 4 squares of toilet paper. I'm cutting back to 2. Things are staying the same in the bathroom, regardless of what the markets do. So that's where consumer staples tend to do rather well as well. And now the second part of that question was, how do you manage risk when buying crypto? You don't. So there's many ways you can try to manage risk. One of the things that I encourage in the CIL is we can put our capital to use or deploy our crypto in locations that are insured. So there are some of the exchanges or lending protocols or DeFi sites, even staking sites, where there is insurance on them. Meaning if they were to get hacked or something, then you would be, your investment would be covered. So those are probably the easiest thing you can do to protect yourself. In crypto, it's still Wild West, especially when it comes to smart contracts and things like stable coins. you're only as safe as the contract that the person who wrote the contract. So if that code is bad, someone could hack in there and take that stuff right away. So, there's certain things you can do. Do your due diligence, do your research, stay with the big, more established companies, stay away from shit coins and, these scammy products out there. That's the best thing that you can do for yourself. But as far as, my holdings that are on different exchanges, I put them there for a reason. Generally, it's the yield, but some is also for protection. What would be the direct impact of MicroStrategy if Bitcoin goes to the low of 20,000? And what is their real business model? All I hear is that they're leveraging. Yeah. The good news is that these loans that they have for Bitcoin are many-year loans. I think it's 5-year loans. So you're okay there with regards to MicroStrategy. What's the real impact? Look, at a certain point, they've been leveraging as much as they can and putting everything into crypto. Getting loans, whether that's issuing loans themselves or getting loans with collateral in Bitcoin, which is what they've done. In the wording for the loan that was established just recently with Silver Lake Partners, I believe the number was like 28,000. Might have been higher than that, or a little bit lower than that. But there's a specific liquidation number for Bitcoin that Silver Lake can liquidate this $800 million worth of Bitcoin that they use as collateral. So you could see potentially MicroStrategy take a big dump if we got below that strike price. I'll have to do my research and figure out what that number was, but it was specifically written in the loan contract that if Bitcoin gets below this price point, that Silver Lake can liquidate it because they are now holding, on behalf of MicroStrategy, $800 million worth of Bitcoin. Remember, they got a $200 million loan, but they put up a 4 times capital collateralized loan. So, that could be a very damaging piece for MicroStrategy if it got that low, but I don't know exactly what that number was. I thought it was 28 or 25,000, and you look at the price of Bitcoin, that could happen. It's not. I would not put it outside the realm of probability here. We're at 30, or call it 40,000 right now. I'll do some research. I'll find out what that number is in case some of you might know, and I'll post it. I'll put a line right here and just say MicroStrategy liquidation price. See if you guys, maybe someone put it in there. Yeah. $4.50 for a Coke. Ugh. I stopped drinking that stuff. Only the reason I drink Coke was with my whiskey. Wow. Who knew it was such a good investment? The global domination. Let's see. Oh, Joe, I see what you're saying. As far as an investment, I was talking about my industry sectors. Yeah, but Coca-Cola would probably still do well as markets crash, right? I mean, we're addicted to that orange or black gooey substance that's in there, Coca-Cola. All right, cool. I think I got the immediate questions out. Sorry, Shred Life, I don't know all the details about that, but that's my take on it. Especially the long-term impacts of rising rates and inflation would be less consumer demand. And what that does, remember that there's other factors that I'm looking at, namely 3. I'm looking at number 1, the inflation numbers. Number 2, I'm keeping my eye on the unemployment numbers, which look great right now. And then the third one, which is looking good, is growth. Those 3 make up the variables for stagflation, which seems to be the word that everyone's freaking out about. But we've got great growth. If we have high rates and we have high inflation, ultimately that is going to hurt growth, especially when you have the Fed selling off balance sheets and reducing money supply. So that's the next piece I think that's going to drop, is watching that transition in GDP going forward. But right now it hasn't happened. It still looks like it's moving up. Of course, we could argue that that's manipulated, right? I think I got all the listener questions out of the way. All right. Now, Merlin, if Bitcoin correlated to producers, is Bitcoin correlated to the producer price index? No. It's correlated to the equity markets. Right now, it seems like they're lockstep with the equity markets. If the markets drop 1%, Bitcoin drops 4%. They seem very correlated to the overall indexes. I'm hoping that disconnects at some point, but right now, it's pretty much lockstep to the indexes at this moment. What is TradeStation for symbol? I don't know. I don't use TradeStation anymore. You can go, I think if you right mouse click on your chart, you can go insert symbol, and then there's a search feature in there. All right, that was one question. Whew. This one ties in. Skilled Stocksman, thank you for all the comments and questions down below the YouTube videos as well. He says, talking about prices being priced in, my Investor's Business Daily Days with Bill O'Neill always said the equity markets are looking 6 months ahead. Do you agree that the market is looking that far ahead and has already priced in 6 months? Yes, I do. I think it may actually be just a little bit more than that. So, yeah, I think they're always pricing it in. I guess we could look at a couple of different things. So, for example, here is the current S&P, right? So right now the S&P is sitting at 4,410. Now that is the current futures contract. Now, if we scroll down here, we can go look at the next few futures contracts. I think I just added them in. Did I not add them in? Oh, son of a biscuit. Maybe I didn't. So let me add those in here real quick. We'll go futures, S&P, and you guys can see right here, there's the June, September, and the December. So I'm going to add in, they're already added in. I don't know why I can't find these. Oh, there they are. Real quick, let me move this over a little bit. And there's the June. So right now the June, which of course is several months away, is pricing the markets at 44.10. You're like, well, wait a minute. What is that telling me? That's telling you that compared to current prices, everybody thinks they're going to stay pretty much where they're at 44.10. If you look at it a little bit further and you go to September, 44.13. So for the 3 months between June and September, they're only expecting the market to rise 3 points. 3 points. That's like nothing. So really, they're expecting a very flat economy. And you look at December, which to me is the best one, and they're saying 44.41. So a slight increase near the end of the year, but most people are thinking that up until September, we're looking at a flat market that's going to do nothing, literally for the next 6 months, 5 months, to go nowhere. Where can I find a correlation chart? Which correlations are you looking at? I usually type those in, so I like to use stockcharts.com has a nice correlation feature. So if you're looking for correlation, you just have to have the right instrument. Stockcharts.com. You can select up here. It's called a perf chart. So we go to perf chart, and now you can just type in whatever symbol. So because BITO is a Bitcoin ETF, let's just do BITO, and then I'm going to do SPY. All right, that's just putting in those two. So you notice that while obviously Bitcoin's performing much worse, you notice that the general direction has been pretty much the same. So when the market started to rally back here in March, April, May, or sorry, in early March, so did Bitcoin. Now the markets are rolling over, so is Bitcoin. So the correlation is pretty strong. It's just the percentage moves are much higher with Bitcoin, period. Yep, MCRI. Yep, it's some more research. That's a great site, by the way. That's static correlations. So we'll go MCRI, more research. Is it MCR or MRCI? I think it's more I think it's MRCI. More research commodity index. Oh, come on. I can never remember that. No, damn it. I've used this one so many times, but I just don't remember where it is. MRCI? Yeah, it's more research. You were right. It's MRCI. So if you go to more research, you scroll down, you'll see you thought it was free futures research, and then you have intermarket correlations, and then Dow and S&P correlations. I like the intermarket correlations because it's got a big grid here of all of them. But yeah, there you go. Thank you for that one, Christian. I would have forgot. I wasn't sure that's what you meant. Let's see. So reading through the questions here. Got the Hey, Merlin, you said a while back that layer 2 cryptos would become obsolete when ETH 2.0 rolls out. And then you said later that you bought Matic. Would you elaborate? Sure. So it's not that they're going to be obsolete. It's just their potential for survival will drop. I think that there's actually some great technologies out there. And the longer it takes for Ethereum to transition from proof of work to proof of stake, the more likely you're going to get the rise of more competitors. And lo and behold, you've got Solana, you've got Avalanche, you've got Algorand, you've got Cardano, all competing in that space for smart contract. And there's many more, but those are just some examples. And the longer that Ethereum struggles, the more likely they're going to start losing market share. Now, when they roll over to proof of stake, It doesn't mean that all of a sudden everyone's going to leave Solana or Avalanche or Cardano. Some might. But I think that the longer they wait, they're giving more business to these layer 2 technologies, or companies that are just doing the layer 1. If you look at Polygon, for example, Matic, what they've been doing has been building out their ecosystem. Now, all of a sudden, instead of just being a layer 2, they're going into many different levels. So essentially, to me, it looks like Polygon or Matic could almost become their own layer 1. And instead of being a token, do their own core blockchain at some point, and thus competing with Ethereum because they've been stealing Ethereum's market share for the past couple of years. So I bought it because I just don't know. If Ethereum has a huge stumble on the rollout of proof of stake, what's going to happen? If Ethereum goes from proof of work to proof of stake and it crashes miserably, you're going to see a huge exodus of people from Ethereum to these other platforms. So I'm just trying to be the beneficiary here of whatever happens, right? If all of a sudden I see that Ethereum rolls out and it's all looking great, then I think you'll see some of the other ones start to sell off. Some will survive, but a lot I think will just disappear. So that's what my reference was. Let's see. I still like Matic. Does OTA still have a real estate program? I don't know, Valerie. It was an awesome program too, but whatever, because of all the stuff that happened, they had to shut down certain things just to stay afloat. So I don't know what happened with the real estate pieces. Unfortunately, I couldn't tell you. All right. Les says, if MicroStrategy goes below that price, would you consider selling puts? Sorry, I forgot the question mark. No. So I don't think I'd be selling puts, because if all of a sudden MicroStrategy were to be forced liquidated, right? So let's say that it happens and they get forced liquidated out of their position, MicroStrategy is going to crash hard, because it could create a chain reaction where they may be forced to liquidate some of their other Bitcoin just to stay alive. So I don't know if I would be selling puts. I might be buying puts less. I would capitalize on that downside as opposed to wanting to be a buyer of MicroStrategy lower. But that's just me. E2.0 isn't actually lowering gas fees, so layer 2s will still be needed. Correct, to a point. It's not that they're lowering the gas fees, it's the congestion of the network. So the code, when you look at the GUI and how gas fees are calculated, unfortunately that's staying the same for Ethereum for now. What's changing is the amount of transactions they can process. So you're going to open up so you can do a lot more transactions per second. Therefore, the demand on the network declines significantly, thus reducing the fees. So that's where they're looking to get a drop in the fee structure or fee price. Now, that's for Ethereum, the first rollout, which is going from proof of work to proof of stake. Then you have the other rollout, which is going to be using sharding technologies. That's right, sharding with a D, to give it another factor of 100x. At that point, you should see fees really start to drop. Remember, part of the reason that Ethereum has these fees in place is to prevent scamming, fraud, and people from spamming the network and shutting it down, because it costs to make these transactions so you don't get spammers. You look at something like Solana. Solana, boasts all this amazing speed and transactions, but it's so cheap that they were sending out hundreds of thousands of transactions and shutting down Solana. So, from a security perspective, Ethereum is way safer. Now you have the risk of a systemic problem by keeping your fees so low that anybody could spam. It doesn't hurt them. What else do I got? Where is Tilly? This had been, yeah. So Tilly is working for a financial planning firm, and they don't want social media visibility. So unfortunately, she can't come on. I've been wanting to get her on the program, and she's like, I can't. So it's too bad. I'd love to have her on. Kevin O'Leary always hyping Matic and H-Bar. Shred Life. Kevin O'Leary always hyping Matic and H-Bar. For the most part, I think everybody here clearly understands. You should understand this, that Kevin O'Leary or Elon Musk or Jim Cramer. Oh hell, I would almost throw myself in the category, but I think I'm much more transparent. Everybody is pumping their goods, right? So Kevin O'Leary, he probably has a big stake in Matic and H-Bar. Going in there as an investor with a couple $1 million. So what's his job? His job is to be a cheerleader and go, H-Bar, yeah, yeah, yeah. I mean, all day long, he's going to be using his power and his influence to sway those securities to the upside. So he may not even really believe in the product, but he's got money on the line. Just like, I talked earlier about how JP Morgan and BlackRock all have stakes in Twitter. Oh, again, it's their job to pump it. Do you really think that JP Morgan's going to issue a downgrade on Twitter? Hell no. They own too much of it. If anything, they're issuing upgrades and positive press releases. So that's one of the reasons on my list of 10 laws. Ignore the news, but listen to every word of it. Just hear what's being said. But remember, anything, in my opinion, that goes across the newswire is scripted, and it's designed to elicit a reaction. And it's generally for the person issuing that press release. Wasn't there a Bitcoin segment on 60 Minutes? I don't know. I don't watch 60 Minutes very regularly, but I think there was something a while back on it, but I don't know. Let's see. So Todd asked this one, and I got to wrap up here because I got a bunch of things I got to take care of. So did you watch any of the Bitcoin Fest? Much merit there, or just a bunch of, as you say, cheerleading? There was a little merit. You know, I think that it got way too hyped up. I was really hoping to see more announcements like El Salvador did when they said they're going to make it legal tender. There are some small little places that are making it legal tender, but that's not really that big of a deal. What we need is, a major economy saying we're going to have legal tender in Bitcoin or some other crypto. Jack Mallers probably gave the most interesting presentation that I saw. I watched about 3 or 4 of them. Jack Mallers, whether you like him or not, he did a very interesting presentation on the history of payment systems. And if you look at how long we've used the traditional payment system, it hasn't evolved much in like 55 years. Oh, it was last night? Oh, I'll check that one out, Randall. Cool, I didn't know it was last night. And what he's basically saying is, for anybody here who's a merchant, if you're a merchant, credit cards are a blessing and a curse. They're a blessing because customers can generally spend more money with you. They're a curse because you're losing percentage. So, for example, you have, I think Visa takes like 3%, but it's not necessarily Visa. You have, let's say Merlin, am buying something I'm at Target, right? And I swipe my card. Well, what really happens is it's contacting my bank. My bank is going through the merchant, through Visa's network, and then going over to the merchant's bank, to Target's bank. So those 3 people all take a slice. They're all adding on to that commission. That ends up being right around 3%. Jack Mallers is saying if we can remove all of those intermediaries by just having you buy it here, whatever currency you want. So let's say I decide to pay with my US dollars. And in the back end, I can send that money over, and maybe Target wants it in Japanese yen. Right before it gets there, his program, Strike, will automatically convert that over to Japanese yen. So in the bank account of Target, they get Japanese yen. Pretty awesome. So that was kind of a cool technology, but that was like one of the bigger announcements. Now you're going to get to a point where you can go to these point of sale devices. I think NCE or NEC was one of the major ones he's partnered up with. So, you're going to start to see it in more places, but, I don't really necessarily want to see Bitcoin. I need to see a lot of them. I need to see the whole ecosystem start to get more adoption. The good news is it's gaining traction and it's slowly building, but I believe that Bitcoin Fest was just a lot of hype, a lot of pump and dump. Not pump and dump, but just pumping, all right? Just real people, evangelical saying, buy it or you're going to die. Look, I think that Bitcoin is phenomenal, but there's a ton of other projects out there I think are awesome. So how much of Main Street is talking about Bitcoin? Typically the time to sell and look for the bottom. Yeah, I think it's a little bit different, GD, because in this situation, what you have is Wall Street is always first and Main Street's last, right? So that's where that phrase or belief system stems from. It's the belief that institutions have been buying this stuff all along, and by the time the guy who's shining your shoe says, hey, you should be buying this, that's when you should sell, right? Because the retail investor is generally the last person to hold the bag. I believe that this is different because cryptocurrencies started without institutions. They started with retail. So my thinking, GD, is the exact opposite. I think you might want to be looking for institutions. If institutions are jumping on board saying now's the time to buy Bitcoin, then that might actually be the time to sell. I think the tables have been reversed here. I mean, think about all the people you know. Most of the people you know that are in cryptocurrency have been buying for a couple years now. Well, institutions are just getting started accumulating cryptocurrencies and digital assets. So I think that historical mantra or belief system is reversed this time. So I'll be waiting for when JP Morgan finally comes out and says everybody should have Bitcoin in their portfolio. I'm unloading. I'm out. Christian says JP Morgan, ConocoPhillips, and COP is ConocoPhillips. That's gas. I think he meant Citi, but may start to edge out Visa and MasterCard by using Zelle. Yeah. I think that there's definitely the writing on the wall. I mean, the one that really is in trouble is Western Union. I mean, Western Union, I don't know how that thing's going to possibly stay alive, but I mean, the whole thing about Bitcoin is I can circumvent anything to do with Western Union, get my money there in just a matter of minutes, and don't have to pay the 25% fees that they charge. All right, man. I think that was it. I had a couple more, but I won't be able to get to those right now. So let me go to the economic calendar. Okay, so let's do this this is for happening for tomorrow. Yeah, I got to run. Here is your economic calendar for tomorrow, the 12th of April. You can see in the middle there, 5:30 in the morning Pacific time, so 8:30 Eastern Standard Time. That's an hour before the equity markets open. You have Consumer Price Index, and look at the jump. All right, look at that jump. 0.8% was the previous. They're expecting it to be 1.2. You know, we've talked about this since the whole Russia invasion thing. This is going to start to impact a lot of different pieces. Now, is it going to impact that much? I mean, that's a 50% increase month over month. That would be significant in that. There you go. That's better. I knew ConocoPhillips. I'm like, wait a minute. That's not right. COF, a little different. That's Capital One. Okay, so this is the biggest announcement for tomorrow, and mind you, they're back-to-back days, everybody. So tomorrow, at 1 hour before the markets open, you have CPI, and then on Wednesday, you have PPI numbers. So you're getting two really big inflationary pieces, both of which have been elevated. PPI has actually dropped a little bit, but the expectation is we're going to see pops in most of these inflation numbers, which, again, will help us understand or at least anticipate what the Fed may do at their upcoming rate announcement happening in May. You also have TIP IBD economic optimism. You have the 10-year bond auction, which should be very interesting. Now, this will probably be the last one that's done without the Fed. Right, the Fed is saying they're going to be unloading a lot of their products. Well, this one is before that deadline, so that would be an interesting one to see what those numbers actually come out at for the 10-year bond auction. Other than that, you've got New Zealand with a rate announcement. A week ago was expected to stay at 1%. Now it's jumped to 1.25. So New Zealand's leading the charge with regards to raising rates. I think Australia will probably be close on the heels of that one, and they're making announcements later on, I think this week. I know we have the euro, we have there's 3 central bank announcements happening this week, so I'll let you know when they happen. But tomorrow night you do have the NZD USD, so for anybody who's trading that New Zealand dollar, careful, could see some significant whips out there in that one. And here is the currency price. You can see AUD USD. Let's go NZD USD, and I will add that in here. Boom. So been selling off over the past 5 days or so, but had a really nice rally for most of 2022. We'll see how this all transpires, but just wanted to share those announcements for you. That's what's cooking for your session for tomorrow. Now, as far as guests go, pretty excited. Sam Evans, fingers crossed, will be able to make it on the program. He's been doing all kinds of different stuff. So we'll have Sam on the program talking about, I don't really know at this point yet. I'll reach out to him tomorrow and come up with some topics for the show. If you have something you want us to discuss with Sam Evans as well, you can put him down below the YouTube video. Just type in the comment area, hey, ask Sam this. That's the best way to get questions answered. You can also email me at TraderMerlin@gmail.com, but down below the YouTube video actually helps out this channel as well. So I've been told. I don't know. If anybody here is an industry expert in how to get more visibility on your YouTube channel, I could use some help. Anyway, that will be it for tomorrow's show. We've got Sam Evans. I've got Kate Irwin going to be on Tuesday or on Wednesday talking about NFTs, which should be a pretty exciting one. She is extremely intelligent with regards to NFTs and the whole industry of gaming and decentralized platforms and metaverse. So excited to get her on the program. And we've got some more guests slated for later on the week. I'm going to have Chuck Fulkerson on Thursday. So I've got a whole slew of guests this week. We'll see how that one goes. Real quick, what about international transactions? With crypto, it's the same for me to send to somebody who's sitting in my living room or any part of the world. I mean, you go to Western Union, it's way more when you go internationally. I mean, the fees are crazy. When I was looking them up, I did a presentation on it. It was like 25% fees. So you want to send $1,000? Yeah, you got to pay $250 in commissions. Ridiculous. Bye-bye, Western Union. Good riddance. You had your run. All right. I don't really talk to Blotz much. I've emailed him a couple times, but I'll reach out to him. And, hopefully he's doing better. But yeah, we'll hopefully get Tim Blotzer on here in the next couple weeks as well. Why not? All right, everybody, that's going to do it for me. Again, if you have comments, questions, feedback, put them down below the YouTube videos. Anything else you want to discuss with me, you can email me at TraderMerlin@gmail.com. Until then, happy trading. I will see you all on tomorrow's show with Sam Evans. Take care. Good boy.